The lone analyst with a sell rating on Fiserv ahead of the company's crushing stock sell-off says the writing was on the wall for months. Rothschild analyst Dominic Ball says he still has the sole sell rating on Fiserv. We can see that on the Bloomberg terminal using the ANR function. When he downgraded the stock earlier this year, he cited issues with its Clover product, a point-of-sale system, writing financial solutions is decelerating, and so the issue seems more systemic across Fiserv. And guess what? We are lucky enough to get Dominic here in the studio. He's been touring the U.S. and happens to be in New York, so perfect timing on both your call and the visit. I guess you've had this sell rating on the stock for a while, and it's actually down 70% since you put it on. Yeah. And most analysts won't say sell. In fact, only 5% of all the ratings on the Bloomberg terminal, which has all the ratings. Only 5% of analysts feel comfortable putting a sell rating on. Why do you do it?
Yeah, well, thank you for having us on to begin with. I think it's really the company I work for, Rothschild Co Redburn. We do a lot more long-form, deep dive industrial work. When I initially did work on a peer of Clover, which is owned by Fiserv called Toast, it was 6 months deep dive research. And that really gives us a ballast of our view and allows us to have high conviction views.
Did you have any clients push back initially when you had that buy signal? And what have they said since the big drop in prices?
Yeah, I mean, I think before Q1 for Fiserv was where there was the most contention. Fiserv was seen as the third payment company to own after the card networks. And so when you come out with quite a contrarian view, there's a lot of questions, of course. It went our way Q1 quite quickly, then it went our way in Q2, then it went our way again in Q3. And so a lot of investors just coming to us asking what is actually happening and where do we go from here.
Great story on the terminal by George McKay and Matt Turner, in which you say also that management has really focused too aggressively on Clover because there's problems there and underinvested maybe elsewhere. What's the future, you think, of the stock? What's the future of this company?
Look, it's a really tough position that they're in. Payments has a lot of technological change that's ongoing. In the last 6 months, we've seen agentic commerce and stablecoins kind of come out of nowhere. And it's tough for a company that has grown through M&A to try and consolidate and focus an R&D budget on new tech. And so peers like Toast that have a single tech stack, we really like. It allows them to have the focus in terms of serving a sole vertical, but also in that R&D budget to do well.
You also notably have a sell rating on global payments. You're one of only 2 analysts who have a sell rating, which is only 6% of the people who cover it. Why are you bearish on global payments? And by the way, I think a lot of people are going to take a second look at your sell rating now.
Yeah, again, global payments and Fiserv are similar when it comes to the ability in their history. They've done a lot of M&A. In payments, we've seen WorldPay, FIS, Nexi, Global Payments and First Data and Fiserv, they've all done large-scale acquisition. And again, as I mentioned, it's really difficult to innovate and change with this new tech when you've done a lot of M&A. And so we hope, and it seems like with a company like Fiserv, they're going to materially invest in the company. That was why there was such material EPS downgrades. And so that's what they can do going forward.
We're in an earnings season now where 80% of companies are beating estimates. And that sounds like a high number, but it's really not unusual. Analysts tend to do what management wants them to in order to maintain access. It's understandable. Do you find with your sell ratings that you're locked out, or is it more difficult for you to do your job?
No, again, going back to where I work, it's a very unique place, Rothschild Co Redburn. We do deep dive industrial work. We don't typically write about the quarter, which is what every other...
Or rely on management to give you guidance.
It's what every other investment bank does. We write, as I mentioned, when we came out with Toast or Fiserv, these are 100, 200-page reports. And it allows us to look beyond the quarter, into 25, 26, 27. And then it allows us, when we do get a lot of pushback from investors, which is always natural, to give us a high conviction view, because we've done so much work on the companies.
So of all the payment companies that you cover, which is your top pick right now?
We love Toast. Toast is a fantastic company. The moat is materially underrated. People see it as similar to Clover and Fiserv. It's materially different. Their ability to win restaurants at a market share rate they're doing right now is phenomenal. everyone keeps betting for them to slow down, and they're not doing so. It's a company that it can easily grow low 20s, easily. We have 1,000 basis points higher than that, with 35% margins, and trades at 20 times 2-year forward non-GAAP PE. If you put that in a software company, it trades at 3 times the multiple. So Toast is a materially underappreciated stock, and we really like Toast.
It's doing, I mean, over the past 5 years, and I always look at a 5-year period because it's the default for the comp function on the Bloomberg, but it's down 14%. Now, it's not doing as poorly as Fiserv, obviously, which over the same period is down 40%, and Global Payments at the same period down 50%.
Yeah.
But what kind of appreciation do you expect from Toast?
Yeah, so we have a target price of $60. We came out being incredibly bullish when it was at 15. It's now at roughly 35. And Toast IPO'd in an environment of 0% interest rates, and we've gone to 5%. So the multiple in a lot of these companies have derated. When you look at the earnings and EBITDA, it has compounded materially. They had 0% EBITDA margin. They've scaled to 35% within 18 months, while still adding more locations for their restaurants than they've ever done before in a single year. It's a fantastic company, and our deep dive on Toast was really allowed us to then look at Clover and competitor companies, and that's really where we came up with our sell rating on Clover and Fiserv and buy on Toast.